Welcome back. This is subsection 4 of section 2, where we primarily deal with supply and demand zones. So far, you guys should understand that a supply and demand zone can exist on absolutely any time frame and can be mitigated on those time frames, but not mitigated on others. Just because, for instance, this demand zone right here, right, the last down candle before the up move, leaving behind an imbalance and no mitigation into it, was a valid one, does not mean that a lower time frame supply or demand zone is still valid in that area, right? So if we get down to like the 4 hour or even the 1 hour, well, even the 4 hour works. If we just look inside here and try to refine this a little bit, we'll notice that this actual last down move, which we could say is a refined demand zone, has actually been mitigated at the open. Both, actually, I would say that it became valid after this candle right here and was mitigated, I believe, right here. However, if we do zoom in and take a real look at that, we'll actually notice that the high of this candle comes in at 1.19598 and the low of this candle comes in at 1.19602. So that actually means that this was higher and has not mitigated the open of this overall demand zone. So even though this looks mitigated, this 4 hour zone that is refined from this daily is a valid demand zone within it. So again, the daily is valid here and this 4 hour one is valid. However, as we get a little bit lower, if we do, and we go find that demand zone once again, so let's zoom out here. There it is. I should draw this out. You can see how well it held here. But again, if we zoom in here and try to find the 1 hour one, or try to find a 1 hour one within it, what we would do is we would start to see multiple areas. So on one hand, you actually have this very last down move before the up move, and what you'll notice is it was actually traded through and then mitigated. This one specifically has been mitigated on the 1 hour and therefore for me would not be an area of interest. Now that's not to say that the 50% for you might not be an area of interest in the future, and there's a chance that this area potentially had some kind of important mitigation. For instance, if we were to draw a line across here, we can go take a look. So as you all know, Euro USD is actually trading below it right now, and traded below it, but we can still take a look at what happened near or around that area. So notice how as it got there, it did stop and have mitigation. However, it went straight through it. So in reality, this zone would not have even been a potential setup or confirmation that you might have been able to catch. So let's get rid of that. Let's zoom back in here and keep looking at the 1 hour. So on the 1 hour, this one could be considered fully nullified, validated, mitigated, and therefore it's no longer a valid demand zone. Now that does not mean that this overall 4 hour demand zone isn't valid, right? So we refined this 4 hour demand zone from the daily, and what did you notice in the future? That 4 hour zone actually held quite handsomely when price got there, and when price got there, we could have used some potential refinement, some confirmation using mentfx blocks, using breaks higher, using validated structure Wyckoff wise, and using continuous bullish price action to get involved in some buys. And as you can see, the actual move from there, even though price did break down in the next few days, actually gave you a potential of, how much is that? About 217 pips for you to actually work with within this entire area. So again, remember that demand zones and supply zones can be valid across multiple timeframes, and sometimes refining them or going inside of one that might have already been mitigated can help you find others that have not yet been mitigated, right? So if we keep looking inside of this area, so remember, this is that 4 hour refined demand zone, and this is that daily demand zone right here. Now, you know, we can go and refine anything within here. So on the 1 hour, this demand zone right here, this last down move before the continuation higher, has also not been mitigated. So this is a perfectly valid one as well. Similarly, we can take this last down move, incorporating these lows. And again, if we drag this out, you can see that this wick right here never really tapped into it. So again, you have all these valid zones that exist in these areas, specifically on this time frame. Now again, if we go ahead and replay this, right? So I'm just doing this for the sake of explanation. We can get even lower and find other demand zones that have not been mitigated yet. For instance, this down move before the up move has been mitigated. This one would not be valid for potential future mitigation, right? You could use it if you'd like to, but for the way supply and demand zones actually work, it is not valid. This one has not been mitigated and actually is left to be valid. It trades above here and never comes back, leaving behind this little bit of imbalance between this and this, showing us that there were potentially orders that are there that needed to be mitigated. So again, what we're actually going to do very quickly is actually, we'll zoom back in for a second, and let's actually extend this one right here. I believe we go this way. Oops, that doesn't do it right. I think if I make it negative, it might work. So if we make this like negative 6,000, see what happens. Oops, that's the wrong way. Okay, fantastic. So let's just make this a big number here, and it'll extend that way. Perfect. Do the same thing with this. Make this a larger number, extend it out that way. I'll do the same thing with this. Okay, so these are all unmitigated demand zones that exist on multiple time frames, and all of these areas can be potential areas where you can expect price to come into, mitigate, and give you potential confirmation entries in the future. This is how you can do that. So again, this is that last one right here. This is that 1 hour one. So again, remember that we're working with multiple time frames. On this specific time frame, you can still refine that 1 hour now to this last down move. And as you can still see, not validated, right? So again, we can get rid of this larger one. So again, you could have used this large daily one. If you remember, this was that daily down move before the up move, or you can go inside it and start to refine areas within it, expecting price to do a certain number of things from these areas. That's how you start to form bias. You refine the areas where you expect price to do something, and you refine them to areas where you believe that mitigation can occur at, and that mitigation can occur at where? Demand zones or supply zones that have not been mitigated yet, thereby refining it using potential lower timeframes. Because as you work through timeframes, the reason we work through timeframes but we don't trade any one given time frame is because it shows us a specific time and price where mitigation on behalf of the institutions, on behalf of orders that were sent into the market, were not mitigated entirely, and we can expect potential mitigation to be filled at that area. Hence why we talk about imbalances and talk about how they can be filled on multiple time frames, even if they're filled on higher ones or even lower ones, right? So like, even as you guys know, if you have a 4 hour imbalance, but on the 1 hour it's all filled in, that does not mean that the 4 hour is not going to get filled. And that's because there are still orders on that specific time frame where price moved too quickly that usually needs to see fills, right? So again, this 15 minute, as you can see, had an imbalance. Again, on a lower time frame, that might, like maybe on 1 minute, that's all filled, but that doesn't matter because on this specific time frame, price moved too quickly and there are orders in here that need to be mitigated. And as a result, as price comes back up, you can see it comes to mitigate the areas in here, just like that. And as you can see, we refine these areas and we can go and make a movement to the right now and actually take a look at where prices ended up hitting. So again, we just went ahead and refined it from as you remember, a 4 hour down move, or if you want to think about it, a daily large down move. And what we did is we took that large daily down move and refined it to 3 specific areas where we could potentially be bullish in the future. Now, even though price has not returned to that area for a while, when it does return there, let's take a look at where it actually goes before it trades higher. So in this specific case, as you can see right here, if we go back down and take a look at where price mitigated, you'll notice that price gave you, from our first area, gave you mitigation at this area, right? Jumped into the open and then to the 50, so about the 50%, and gave you some kind of mitigation at that area. This move here, right, although it might have not been a confirmation on this specific time frame, might have been confirmations on much lower time frames where you could have been a part of that mitigation play. Now, in this case, it wasn't perfect. That's fine. There doesn't have to be a perfect move right into that demand zone and completely new highs to be met, right? Instead, price broke down a little bit lower, mitigated the second zone, and from there, again, gave you potential setups that you were able to potentially catch on lower time frames because even though this move looks relatively small, if we look at the actual move and just measure what actually occurred here, we'll notice, so actually if I can get let's actually use this tool right here. If we just do this very quickly, you'll notice that is a total of 14 pips. 14 pips with an entry of about 1 pip stop loss or even less if you're working with the lower time frames, which you will learn to do, is 1 to 15, is 1 to 10, is 1 to 5, depending on where you enter and how you enter it. On the other hand, it could have easily been a break-even trade, or on the other hand, it could have still been a lost trade. What you'll notice is as we look at this, price didn't actually stop at any specific given refined demand zone that we looked at here. Now, on the other hand, right, if we go back to the 4 hour chart for just a second and zoom back into this area, right, just like this, if you all remember, we actually caught a beautiful buy from that area. If you had just used the last down move that had not had mitigation, remember we looked inside of this wick, there was no mitigation inside there, right? So this whole thing was valid. If you had just looked at the overall 4 hour zone without using the refined zones here, so I mean, we'll keep them up for just a second, but if you did not use the refined zones, what you'll notice is you would have actually been tapped into a valid trade that actually did hold. On the other end, by refining, sometimes you are going to limit the potential entry that you may be able to catch. On the other hand, you could have also continued to refine these zones to find the actual demand zone that this went and mitigated. And what I mean by that is let's keep on working with that 4-hour range, that 4-hour zone that we were looking at earlier. So let's go back inside this 4-hour zone and maybe go to a 15-minute again, right? And as you all remember, when we were working inside of the zone, we used this last down move before the up move to use as our potential demand zone mitigation. On the other hand, if we continue to get lower, right, and kept on getting lower to find new zones, what we'll notice is this zone right here, right? This zone, once again, becomes a perfectly valid demand zone that you can have and you can use because this is a refined demand zone. Now, sometimes the best way to find these refined demand zones is looking for the demand zones that cause breaks of structure, as you all remember. So if we follow this, there was a break of structure here that came from this area, and as you can see, it was mitigated by that demand zone. Continued higher, breaking new structures, leaving behind demand zones that were mitigated, continued higher. New highs were broken by this demand zone. As you can see, they were refined and then they were mitigated on the way up. Then we had new breaks of structure from areas right here. Again, you could have used this. However, notice how this zone here didn't necessarily break any important structure. It didn't even make the move that came to break this here. Instead, the move that came to break this right here was more so justified by this demand zone, which you'll notice has been mitigated. So again, you have to sometimes read the story of the way structure is now delivered to you, the way demand zones and supply zones form within demand and supply zones, right? So that's the refinement and how those areas held down the line or whether or not they were refined. Now, again, I ask you, as you take a look at this, what zone could you basically say broke the next important high? Well, this high was pretty much broken by the wicks here or the wicks here. And those came from two locations. Either you could look at this demand zone, which as you'll notice, got mitigated right here, or actually partly mitigated. Actually, it might have not even been mitigated. Maybe got mitigated in the future. Or you could say that this move here was caused by this overall demand zone, which again was mitigated somewhat. Or if you refine that to, again, the last down candle, as we always speak about, right? So if you refine that to this last down candle right here, drew that out, you'll notice that that's where that came to mitigate. And again, we can then take a look at the 50% to make sure that everything got mitigated properly. And what you'll notice is the 50% was not actually mitigated. So we can maybe use the 50% as a potential future area where we can expect mitigation. So again, you can use multiple time frames. Sometimes I will use a larger zone and watch the intermediary price action within that zone. Sometimes I'll take a look at the zone on the inside and refine those demand zones, supply zones to smaller areas to give me a better understanding of where exactly price may come to mitigate, right? So at this specific point, we have really this demand zone here, which has not been tested and could be tested down the line. So we'll use the lows again, very similarly, the lows, because that's the last down move before the up move. We'll extend this infinitely so we can actually see it in the future. We'll get rid of this. Now, we'll get rid of this as well. So again, we're looking at all the areas in here, and you'll see that on the 5-minute, the specific areas that we can use is going to be this demand zone, and really, you could potentially use this demand zone here. However, this demand zone wasn't really used to do anything large. So on a lower time frame, it might have broken this. So there could be some mitigation and importance of this demand zone in the future. However, right now we're trying to go and find exactly what happened with the move that we were looking at on the right. So again, as we do this, you can also notice that you can get even smaller about this move. So again, as you can see, we're still looking, if you don't recall yet, we're still looking at all the areas that are within this demand zone's mitigation. And as you remember, in the future, the market does come to this zone, mitigates it, and then continues higher. And we were actually able to catch a buy there together as a group. However, if you wanted to refine this, refinement of demand supply zones comes from looking inside previously established demand supply zones or even mitigated supply and demand zones, right? And looking inside them to find the unmitigated portions of that supply and demand zone. So for instance, even though this down move right here before this up move had given you a demand zone that has been mitigated, that does not mean that within it there isn't price action or movement on behalf of the 1 hour, the 15-minute, the 5-minute, or as low as you want to go, right? 5 seconds even if you want. You've seen us refine to a very, very low time frame even on Bitcoin. If any of you remember that back in the day, and again, we'll do this in the future, then you might find areas in here that will function as potential mini areas, right? So there could be an area right here, and there could be a demand zone right here that are unmitigated on the lower time frames that can function as future demand zones where you can look for potential buys, right? Because there could be mitigation that happens there because there are orders that are still resting there that have been unmitigated. So that's what you can look for when it comes to that refinement. So again, since we're working with this one, let's actually zoom back in here. Let's get to the 5-minute. Let's continue to work with some of the stuff inside here. So within that 4-hour push down before that push up, and it was validated here, you can use so far this demand zone at 50%, which has not been mitigated, this demand zone at the open, which has been mitigated, so we wouldn't use that, this demand zone here, which has not been mitigated, and again, we might still be missing the actual mitigation because sometimes it requires you to get even deeper, and in this case, we can't even get that deep, so let's actually go back to the daily for 1 second here. Let's go find where our demand zone was. Let's go back into it just like that. Let's go back to our 4 hour. Keep refining that. So this time, hopefully I can actually go this far back. Let's go back to this 4 hour demand zone right here. Let's get back to the 5 minute. As you all remember, we are right now, let's forget about this stuff right here. We are right now just refining the areas in here. We have this demand zone here, this demand zone here. Now, again, as you're looking at this, there might be others in here, such as this one or something of that sort. I'm not really looking at that right now because we know that price mitigated somewhere on the open here. But again, go back in time and find inside demand zones, draw them out and see how they reacted in the future. You'll usually notice that there was some kind of mitigation that occurred at them, as we've spoken about in the previous supply and demand subsection videos of this section. So maybe we can get down to the 3 minute as low as we possibly can. So let's try and do that. There we go. We can. Fantastic. And as we work through this again, we see that there's no real demand zones that we could use in here. This is still the one that we can be using, right? Again, we're going to play price out a little bit here so we can see that it mitigated a little bit of this open, right? As you remember, there you have it. And again, remember that did not actually touch the 50%. So just to prove it, we can actually, let's draw out 2 lines. Let's actually make sure that the 50% of this was not mitigated. That way we can see if it's actually valid or not. So we're going to take this just to the bottom, just like that. Okay, let's delete these 2 lines, just like that. Let's then zoom out. That was that line, that was the bottom. What you'll see is that 50% was mitigated, right? So this 50% of this down move was mitigated. However, now we can also remember that the last down move was actually this one, right? Because that's inside of the previous one. So similarly, we can draw our 2 lines out, right? Because I just want to get the perfect 50% of this. Draw the 50% in, just like that. Let's delete this line. Let's delete this line. Let's delete even... So that's the 50% we drew. Let's delete this line too, and let's delete this line. And what you'll notice when we actually look at the 50% of this last down move, you actually do not have mitigation at that area. So this actually is a smaller zone. We actually had that wrong. This is the refinement of the specific demand zone. And again, as we get lower, okay, so we can't even get that low, but inside of that specific area, as we get low enough, you'll actually notice that that price was never touched. So in this case, you can see that price actually did look like it mitigated deeper than that specific refinement. And that is perfectly fine, and that is perfectly valid. That specific area that we just had highlighted was not the area that price was actually aiming for when it came to it. Instead, it was aiming for the general larger demand zone, because remember, supply and demand zones function as fractal setups of themselves, right? Just because a 4 hour demand zone got mitigated does not mean that a lower time frame area or supply and demand zone did get mitigated. In this specific case, we could have gotten even lower. So again, let's drag out both of these. So these are the 2 valid ones that you could have used, right? Both of these are 2 perfectly valid ones on that specific time frame. And what you'll still notice, even with all this refinement, is that price came really in between of these 2. Now, it does not mean that your demand zones or supply zones and their refinement was wrong in this specific case. All it means is that price was actually aiming for something that might have been even on a lower time frame, which we cannot even establish right now, because as you know, we are this is very far back in time, and we can't get that low, and that's sometimes going to be a thing. But despite that, despite the fact that we couldn't refine to such low time frames, as you all remember, we did refine to this last down move before the up move that was unmitigated. And as a result of just refining to that area, we were able to catch the buys from this area right here when we were looking for price to come meet higher. Right? And as it came to meet us higher, we were able to see the distributions and breakdowns in price here. But again, as we were part of this, we were still expecting overall bullishness from these areas. So similarly, let's do one more idea of refinement. So this again forms the exact same way using supply or demand zones. And what you'll see here, and this is actually a good example of something that has been mitigated but hasn't been mitigated lower, is let's find the last down candle before the up moves happen, right? So last down candle is here. And as you all remember, so let's get rid of this this stuff we had down here, because this is all we're going to operate with right now. This is your last down move before the up move, and as you all remember, we use the lowest part of the wick before price moved. So this is your overall, and as you can see, it did hold, but that's not important right now. This is your overall demand zone, okay? Now, when we were getting involved in this, or wanted to get involved in this, we can't just use this demand zone because we understand, I mean, you can if you want to, but we understand that there was mitigation that had already occurred in here. So we got a little bit lower, because even though one time frame's mitigation might have already occurred, doesn't mean a lower time frame's mitigation has not occurred. So we can get inside here and start to refine. Now, within this 4-hour fully invalidated demand zone, because as we know has been mitigated, there is this last down candle, which we can again come and highlight as your last demand zone, where, as you'll notice, price has not actually mitigated, which means that in the future there may be mitigation that may take place in this specific area. Now, this is good enough refinement for me. I like this refinement because it shows you an area where you can expect that mitigation to occur. On the other hand, if you are not happy with that, or want to be even more precise, right, with the potential ability of missing something, well, you could get deeper into here. And what you could do is get onto the 15-minute and ask yourself the same question. Where is that last down move before the up move occurred? And again, you can ask yourself which demand zone or supply zone caused the break of some potential important structure. So structure was pretty much broken here, and that structure came from this last down move here. Similarly, we highlight that last down move and we follow it down to the wick. So again, this is still a perfectly valid zone. Now again, as we zoom back out, you can see that we're actually refining those demand zones to very small areas that are unmitigated and valid demand zones on lower timeframes. And as you can see down the line in the future, when price does come to it, I'm pretty sure that this is the area that it may tap into before it comes higher. Now, let's actually zoom out just like that. Fantastic. Let's just watch this area. Let's see how it holds down the line, right? So price begins to come closer and closer to it, taps right into it, and basically trades away. Now again, as price gets there, there's multiple ways to enter it. And we will talk about this down the line in our future section of the videos, especially with Wyckoff being covered and structure being covered. But ultimately, you have a demand zone that's been refined to a valid area. You have price coming down into it, mitigating it, as you can see. Even if we wanted to draw this in, let's try the 50% rule, right? You can actually see, so I'm trying to get the perfect low. You can actually see that this came to mitigate the perfect 50% of that zone. So you understand that as you're seeing this, the reason for this mitigation is because, again, there are orders in this last demand zone. And within that last demand zone, those orders exist at the open and the 50%. And the 50% is usually the deepest those orders may exist in. Now, what's interesting is if we go ahead and we draw a line across from this mitigation to this area here, and this is one way to actually test yourself, we can go back inside this area where we just refined this mitigation and find exactly where it tapped. So again, we can go and over refine and continue to refine that area that we just refined to, I believe, the 15-minute, right? So that was that last move, but the reality is it tapped into this zone right here. So let's go find if we can actually pin down that specific area. Let's get to the 5-minute and see what's happening here. So similarly, what do you start to see as we get to the 5-minute? You see the last down move, which is actually this unmitigated demand zone right here. And if we come, put that to the low, remember, we're using the wick low. So now we can use this area right here. You'll notice that now we have this demand zone that is currently sitting right here. Now, similarly, we can get even lower. Hopefully it'll allow me to go to the 1 minute. Yes, it will. Fantastic. And we can look inside here again. Now, notice how there actually is an unmitigated demand zone sitting right here, right? And there's actually multiple on the way up. Now, if you use this specific zone right here, what you'll notice is price actually did not tap it. And this is basically because there weren't enough orders, basically, right, in that area. We are just trading footprints. And sometimes over refining these footprints can actually do more harm to you than good. That's why oftentimes I will use a larger area. So again, we have two areas that you could have refined it to. That one, the one up here, or this lower one, the one inside it, right? And again, they're both perfectly valid. Now, if we delete the replay tool and go back to where price came to mitigate, what you'll see is price actually didn't reach this one, but did reach this one. And this is the idea of not over refining too many areas. However, if you want potentially the best guaranteed RR or the best area where you can expect mitigation to happen from, then you would want to refine to something like this lower price and wait for price to tap into those areas before looking for either given confirmation or entering with the risk entry, which is just entering with a limit off that specific supplier demand zone. Now, similarly, if we draw this out, we'll actually notice that potentially we had future mitigation at those areas. So let's just draw this out a little bit, and you'll notice that actually we did not, and there was nothing that could have potentially given you an entry from those areas. And what I mean by that is even if we get lower here and look at that area, you can see how quickly it came through it, thereby invalidating it after it held once back here. right? So again, not every supply and demand zone is going to hold. That is part of this game. You have to understand that there are multiple that form throughout a given price action day, especially if you're looking at multiple timeframes, which is why I always say start with the higher timeframes to understand how to look for them on the higher and then work your way down. Otherwise, it can get very, very confusing. And oftentimes we will see mitigation at these areas. And then refining those areas can help you understand where price may actually come. And that will be part of building a larger bias over time on your entries. So thank you for watching, guys, and I'll see you guys in the next subsection of this video. Go refine. Thank you.